My name's Tony Cardenas, and this is the Indy Real Estate Market Weekly Podcast. Today I'm sitting here with Kyle Morse with FC Tucker. He's finally back from Miami, Florida. And Shelly Walters with FC Tucker, Carmel. And she is probably going to be in Miami, Florida here soon. No, she's going to be taking a few vacations this summer. Hey, guys, what's going on? Justin's out, and Greg Cooper will be on the show here next week. So let's talk about the market right now, because I do have some stats from Meridian Kessler, and we'll go through the stats later. But tell me what you guys are hearing and what you're seeing.
The market is very dynamic, I think is the best word for it right now, because we have low inventory. Although inventory is going up, there's just a pretty high absorption rate. We're kind of briefly talking. We try to do more of it on the podcast now instead of beforehand.
Sure.
We've got stuff selling, to kind of what Shelly was talking about beforehand, was 10% over whatever the list price is kind of a good starting point. But then if it made it through the weekend, we get stuff for $10,000 under list, right? And
right,
so,
right.
We've got we talked about how to write competitive offers and all that stuff at our sales meeting this morning, and we've had a ton of success with people here in the past 30 days who are sub 200. And some of them need seller assistance. We do INDHP,
What is INDHP?
There's just quite a few programs. INDHP is kind of a different example because it kind of tends to deal with some development. But
Indiana Housing Program.
Yeah. But basically it's down payment assistance, right? So there's multiple programs you can use.
There are multiple programs out there to help people right now.
Correct.
Well, and you know what? I saw something this actually a couple days ago where somebody was complaining because their conversation from the list agent was, your buyer's not qualified because they need assistance. That's not true.
They are qualified.
They qualify. They just are going to take advantage of the assistance that's available to them. That also goes along with the VA loan.
Yep.
When people see zero down, they're like, oh, they don't have any money for down payment. They're taking advantage of the ability to use what's available to them.
Right.
So,
and there's some advantages, just like you said, with VA and FHA right now. You got one lender out here giving up to 1%. So, somebody's buying a $400,000 home up to $4,000, they never have to pay back. We're not going to say the lender's name right now, but if you guys get somebody, we'll run it through, see if we can get an approved for them through Simple Mortgage 123 here in the Indiana market. But the bottom line is, Shelly, you're exactly right. There's a lot of little different programs out here to help people.
And they're qualified. They're a buyer. And so honestly, I'm glad that I can get people houses again, because the institutional buyers are kind of gone out of that marketplace because interest rates are higher, whatever it may be. And so, those buyers have been sitting on the sidelines for 2 years. And so we've been able to get people houses. It's really, really nice.
Well, and as an agent, you need to know where those programs are, what they are, and know what lenders are available to you that can help you with those. But why wouldn't you? If you're a buyer and you know that you can get assistance, monetary, anything, why wouldn't you take advantage of it? Because
I don't think a lot of the realtors, or I don't think there's enough marketing and advertising out there for these buyers to learn about some of these programs. That's
right. Well, that's what I said. You also have to. You just have to know and look into it as an agent to try and help your buyers in any way we can. But I just get back to buyer or list agents and sellers need to not look at them as a distressed buyer, if you want to call it that. They are just taking advantage of what's available to them.
Oh, I heard over the weekend too, where somebody brought up to me, FHA appraisal. I'm like, that's not there may be conditions to close. They're not using different houses, people. Like they run the appraisal the same way. Right. There's just conditions to close or whatever it may be.
Right.
And there's still a miseducation on that, So I don't know. Some of that's just education and the struggles.
What we need to do is I'm going to get a guy in here that's an actual FHA expert. Okay. Yeah. And that would be nice to get somebody.
It would be a good conversation.
And VA. But hey, let's talk about, go ahead, Shelly.
I was just going to say, so getting back to having things for your buyers, I think what we're running into, maybe more of it, is that the seller and the list agent are saying that they think that's a bad offer, so they just put it to the side and go to other offers. If the price is the same, the buyer, just because of their program, doesn't make them a lesser buyer. And if they're even $5,000 over, people are turning down those buyers because of the program they're using or the loan they're using. I don't
That
know.
all goes with an experienced loan officer too.
Yeah.
I mean, you've got
agree
to
with
get
that.
these guys that know what they're doing.
Well, and also the thing is I highly agree and do myself, and I know you do. I get the lender involved when we're making an offer. The lender and I come at them at the same time, and the lender gets a hold of that listing agent and says everything they can to promote my buyer and who they are and that they're qualified.
That they're a strong buyer.
Yeah, so lenders really need to be involved in helping us as agents in presenting our buyers and our offers.
Well, hey, since we're talking about lenders right now, subject to your credit score, you could have definitely interest rates at 7.25% all the way down to 6.5%. Okay, subject to your loan to value, purchase, credit score, debt ratios. So, your rates you could get down to 6.5%. You might even be able to, I'm going to say 6.5% is the floor, but a lot of rates are 6.875 to 7.25, depending on what your loan to value is. And that's why the traffic is a little slow out here, in at least our market. We're talking about the Indianapolis metro market, meaning Hamilton County, Avon, all these other areas. So,
well, we've been talking about that before the show started
Right.
in regards to buyer fatigue right now.
Right.
I mean, buyer fatigue is real. And I also think agent fatigue is real.
Sure.
Oh, after
Because-
the past 3 years, because last year coming into the winter, it was just like after the past 2 years, everybody's wore out, and here we are again.
Yeah.
Right? So-
And it's even maybe worse because it's just less inventory. And we were looking at last week we looked at inventory over last year compared to this year. It's down.
yeah, I mean, this is a different year. So, I mean, the comparisons are, if you're going to buy a home, you better be ready to put an offer in because there's not that much inventory right now.
Well, and I have one I'm dealing with right now, trying to make an offer. I'm helping my buyers. Looked at the house yesterday, and it had only been on the market for 4 hours, and they already had 6 offers. This
Yeah.
is a $600,000 house. And so as an agent, you don't have time to go and look at the house and think about it anymore. You also don't have the ability to wait till tomorrow. I mean, you literally have to, again, we're back to having the computer on the hood of the car and
Right.
typing up stuff.
Okay. Hey, I want to jump into the traffic report for the housing market. And we're going to start off with Shelley. Shelley, I want to kick it off with Carmel and then Westfield and then Zionsville. Give us the rundown on that, and then we're going to jump over to Kyle Morse.
Okay, so in Carmel, past 7 days, 50 homes hit the market. 23 of those already pended. In those 7 days, the average day on market was 10. The median was 3. So we're now below that 4, that magic 4 number we used to talk about. The median is 3. So what's going on is the agents are taking offers even quicker. Active now in Carmel, 83, all price points. That's extremely low.
Right.
30 days, we've had 113 sell. The average day on market was 23. The median was 4. So they're just flying off the shelves. Westfield, we had 42 hit the market. 7 of those pended, so a little slower. 56 days on market average there. In the past 7 days, 21 median. So I think we're dealing with some new builds
in
there.
Westfield. Yeah, I mean, every corner, every roundabout has a new build on it. seems like,
In
as you go
Westfield,
north.
active 167, 90 of those are new builds. So
Yeah,
only
absolutely.
77 are actually resales. In the past 30 days in Westfield, 119 sold. Average days on market 51. The median was 8. So 30 days, showing those numbers. Zionsville, 18 hit the market. 12 of those pended. Average days on market 13. Median was 5. And past currently active 45, anywhere from 350 to 11.9
Yeah.
in Zionsville. Past 30 days, 50 sold, 22 average days on market, 4 for the median. So we're really speeding up on our days on market.
Well, that's we are. Let's jump over to you, Kyle, and then I'm going to do Justin's report for him since he's not here today.
All right. So in Fishers, we had 31 go on the market, anywhere from 275 to 1.4. 18 of them are still active. 13 of those pended. 29 actually pended total last week, though. Average days on market is 11, so that's really, really low. I mean, it's not 3, right? But,
Gotcha.
but it's low. I didn't do median. I had to pull it
all right.
last night instead of this morning. And there's 75 active on the market in Fishers. And then in Noblesville, 39 went on the market anywhere from 120 to 2.3 million. 17 of those are still active, 22 of them pended, but 45 total pended last week. 20 days on market, which is a little bit high because there's a couple of new constructions, and there's 80 active on the market in Noblesville, which is interesting. So I was looking back, Noblesville was actually really slow for the past couple of months, and then the past couple of weeks, there's been more activity in Noblesville than there has been in Fishers, and Fishers is super competitive right now.
Absolutely.
I mean, super, super
Oh, yeah.
competitive. But even then, I would actually argue, based on this, the numbers, Noblesville has way more going on than Fishers does right now. It's just
Well,
that
yeah, and
Fishers is
and
a lot of
lower-
buyers competing for the same stuff.
Right, and also down in the Noblesville area, isn't it a lower price point?
No, I mean, Noblesville's got 2.3 million on the market,
no,
and Fishers
I'm-
got 1.4.
Well, I'm talking about your average house.
Not anymore. That's an old
Yeah, it's
myth.
all Hamilton
okay.
County.
Well, we were just talking about it a few weeks ago, so
I would say it's dependent on area.
Yeah.
Okay.
yeah.
In each place.
But Noblesville,
Yeah.
we could, but that was a while ago.
Yeah. So I mean, I would say average. I don't think you're wrong. I would say like there's still pretty somewhat apples to apples to a certain extent.
Yeah.
all right. Well, hey, Justin's here. Justin's not here, so he sent me in the stats for his area. Fountain Square, 3 new listings, 22 total, 4 pending, 2 sales, average $407,500. Days on market is 21, median 6. Bates Hendricks, 0, 10 active, 2 pending, 1 closed at 255,000 days on market. This is kind of weird, 123. Okay, Meridian Kessler. Okay, Meridian Kessler, one of my favorites. 10 new, 6 have already sold or pending. Okay, total on the market right now is 16, and I don't think you'll have 16 by Sunday.
No.
Okay, 5 sold, average of 478,000. Days on market 9, median 4. Ripple, Broad Ripple, 9, 6 are pending. And I did talk to somebody about a week and a half ago that their house was like $275, and they ended up getting like $300 for it. Okay, back to Broad Ripple. 9
That's that 10%
new,
we said.
right? 6 are pending. 11 total active. 5 closings. Average price $305,000. Days on market 10 days. Median 4. It's crazy, but I really thought these numbers were going to be a little bit bigger this week.
On inventory?
Yeah, I thought we were going to have bigger numbers. And I mean, when are the people going to start coming out listing their homes? Because let me tell you something. It seems like it's time to do it.
I think if we go back about 3 or 4 weeks of in our podcast, we were like, "Oh, it's going to pick up." Just
we did. We
we got
did say that.
3-4 weeks from now, we're going to be looking at numbers picking up. No,
No.
not at all.
Yeah. So, like, how do we like kind of quantify what's maybe going on? Like, just
You got
pulse.
higher interest. Look, people are not. Look, you have people a year and a half ago have interest rates at 2.75 to 3.25, 3.5 to 4%, wherever they got in, and you're going to sell that house to go buy another home and give up all that equity you're going to give on that house, and then you got to go pay a higher price for the house that you're going to get, and then on top of that, you're going to pay 6.5 to 7.25%. Are you crazy?
Right.
I mean,
But
Right.
people
The
do
peop-
have to move, and people
The
do have
people
to buy.
that are moving
Yep.
have to move. We are not seeing the what do you call it? The just casual. Let's just move for the fun of it.
Yep.
Or I would like a new house, or I would like another bedroom. There's got to be some pretty major reasons why somebody's going to move today.
And it tends to be like 1 for 1 because people are trying to find a house and then they list it. I mean, like you get an absorption rate that basically ends up being a wash because they
Right.
go get one off the market and then they list their house. Right.
You're right.
So, but to your point, that will change eventually. I just think we're too new to the hard shift that we went through with interest rates. I mean, next 7 years, sooner or later, somebody's just going to be like, okay, so prices keep going up. And I have to move. And
Just think about that. When we were talking, I remember conversations we had a year ago. We kept saying, if you want to buy, you need to buy now. We don't know where we're going to be. You need to buy now.
And we're higher.
Because the prices are not going to stop. We are now where we are today. They're higher. And I had this conversation yesterday with my buyer. When we were looking even last fall, we're already high. I mean, every day that ticks that you don't buy rates go up, prices go up. I mean, it's not.
You're right.
And then people have the conversation. What's going to happen is when is it going to drop? When's it going to drop? How much is it going to drop? We don't know, but you can't.
If somebody can't do it because of the affordability piece, like that's the piece that makes sense to me. Because I mean, your mortgage on a $300,000 house right now is the same as a $500,000 house 2 years ago, right? I mean, that's just what it is. So if it's like your monthly payment, I totally get all of that. If it's because you're predicting the market, I don't get any of that, right? And because I mean, you only have the money that you have to move. I mean, let's not be unrealistic that you got to be able to afford wherever you go. But if it's because of this idea of the interest rates are high or the market's going to drop, I just don't understand. The data is just not there for any of it.
We're never going to see a drop unless I say this all the time.
Catastrophic
Action.
To be bad for everybody. So.
Right. So, but look, when we had a catastrophic event, the pandemic, prices skyrocketed over the past 3 years for that. So what is going to cause it to drop 40%?
No, never.
Yeah.
It's not
I can't see it,
and you're going to see interest rates stabilize right now because I'm telling you something. We'll get some dips downs, but I'm going to tell you we're going to have more dip ups on the upside than we
dip ups. I like it.
Than we are on the downside, and I'm telling you, we'll talk about that in September and October.
Yeah,
all right.
Can see that.
Well, hey, this is a short show today. If you're going to sell your home, get it listed with a professional realtor. Preferably this week, use an FC Tucker agent, Shelley Walters, or Big Daddy himself, Kyle Morris. We will let people reach out to Justin Griffith with Keller Williams. But anyway, Shelley, what do you got to say, and how can somebody get a hold of you if they need some assistance on buying or selling a home?
You can reach me on my cell phone, 317-201-2601. My email, Shelley at Shelley Walters, and it's a Shelley Walters Realty Group with FC Tucker.
Kyle Morris, how can they get a hold of you, please?
It's Morris Property Group with FC Tucker here in Carmel, 317-649-5122.
Okay. Hey, everybody, thank you for listening to this week's podcast, and we'll talk to you next week. And we're going to have Greg Cooper on the show, and he'll tell us what he thinks about the market. Thank you, everybody.